renters, how many renters there are in the United States. But let's start off with renters and what's happening with millennials. What's happening there?
Well, the millennials, they call, there's like Generation X, Generation Y. This is Generation F, because that's what's happened to them, boy. They're in trouble. They have lousy jobs. They're deep in debt, and their future is very bleak. So now we're looking at and these are the facts. We have more renters now than any time since 1965. Back then, the percentage was 37%. Now it's 36.6%. So when you look at what's going on, we have, of course, rising home prices. That's a big one. But also, the more important element is that look at all these millennials that could afford homes if they went to college. You have a better opportunity of making more money. Yeah, but now you got out of college and you have on average, almost $40,000 worth of debt? So they're burdened with debt before they even begin their new lifestyles. And again, they're not marrying as they were before, so you don't have family units being developed that seek out to buy a home. So we're having a lot of, demographic and psychographic changes going on, but the bottom line is still the bottom line. And the bottom line is that they can't afford to buy. And now they're also in a catch-22 in the sense that rents are so high. So in many aspects, is it better even to buy than to rent because the rents are going up? So we're looking at a situation we've never seen before in recent years, or going back decades. And the other one is you look how many generation millennials are living with their parents. And they can't afford to even move out of the house. So the college debt and the lack of jobs that pay a living wage. And again, I'm not making this data up. You see what comes out every time they come out with the employment numbers. You're seeing wage increases that are flat and by real consumer price index, not the phony one that they give us. They're actually in decline. Oh, here's another fact. Millennials. Going back to the boomer generation, when boomers were their age, millennials are now making 20% less than the boomers were at the same age. So those are the facts.
Gerald, let me interrupt for just a minute. There was a Harvard study just came out, and it relates to what you're talking about right now, but almost 40 million Americans, quote, live in households or housing they cannot afford, end quote. So that came out from Harvard. 40 million Americans can't afford to pay for housing? I mean, this relates to what you're talking about, but that's a shocking number, isn't it?
Well, of course it's a shocking number, and you look again, America's in a nation in decline. There's developing nations, and what America is now is an undeveloping nation. Again, it's there by the data. And so if you're in business, by the way, you better start looking to where you're going to, get your money from. And the reality is that it's still the baby boom generation. It's about 50, actually. From 50s on up, that they're the only ones that are spending the most. And a lot of the money, of course, is going to health care, but another one is going into entertainment and travel. So it's really important to get away from the hype and look at the reality. One of these BS lines they keep putting out there, well, the millennials aren't spending money on homes and other activities because they like to have experiences. What do you mean they like to have experiences? Like, we never did anything? We never wanted experiences? So they make up this stuff because it's an economy in decline and they're trying to make an excuse for it. Millennials like experiences. Oh, yeah, I just sat at home all day. I never went outside. What do you mean millennials like experiences? They're not doing these other things. They're not buying things. They're living in, how about their tiny homes? You wonder why the retail business on the furniture end is not doing so great? Yeah, how much furniture do you need in a tiny home? The size a little bit bigger than a self-storage unit. So these are the facts, and people don't want to face them. Even think, when you look on the broader scale, look at fashion. This has been going on for a number of years now. But they keep talking about it and keep building it. The distressed look. I'm not making that up. Great Keep tearing those jeans in many more places that you can. Just think of the word and putting it onto fashion and then promoting it as a culture. Distressed. Hey, isn't that happy? Isn't it great to be distressed? I love feeling distressed. I love feeling distressed so much, I'm going to dress distressed. Because after all, it'll show who I am, how I feel, and how I'm living. The symbols are more than symbols, they're actual facts. They're distressed with the job opportunities that they don't have as more and more companies gobble up more and more and give you less and less opportunities. They're distressed because of the debt levels that they have. Look, when we were growing up, every year when they used to do these polls, the future was always going to be brighter than the past or what was going on currently. Now it's the exact opposite. Matter of fact, once upon a time, they elected someone to be president of the United States who came up with a slogan, "Make America Great Again." Again. Go back to the past. Because the future is dim. So that's why you're seeing what's going on, and they're covering it up. They're covering it up with excuses, and they don't want to look at the facts. Look, everybody knows that listens to King World News that the only reason why the equity markets around the world boomed and continue to boom is because of the cheap money. And the cheap money has, yes, it has widened the gap between the rich and the poor. Those are facts. Folks, as Obama used to call us, folks. Yeah, us folks, since 2009 to when Obama left office, 95% of the wealth created went to the 1%. Folks. Look at the opiate crisis, folks, that we have. Distressed looks, distressed behavior. America is becoming the first underdeveloping nation of the 21st century. It's by the facts you shall know them. And that's what we're putting out here, are the facts. So it's not a bright future. The only thing that keeps these equity markets going up are what? A flood of cheap currencies.
Gerald, let me ask you then about the next topic I wanted to cover with you was the dollar. We'll talk gold later, or you can bring it in here. But the U.S. dollar has been declining. What's going on there?
Well, the dollar's dropped to a 2-year low against the euro, for example. Hey, how about the Goldman Sachs gang that said the euro would be at parity with the dollar by now? And now we see the euro, the dollar's dropped to near a 2-year low against the euro. Why? There are a number of reasons why. And one is the Trump rally. The dollar really rallied after Trump got elected. Those are the facts. He was going to do these things that, are going to change the taxes so people would get more money to spend as well as corporations. That hasn't happened. Infrastructure spending hasn't happened. These are all going to be GDP boosters. 3 to 4% GDP growth hasn't happened. What do we end up with the last quarter? 1.4? Where do we go? We got nothing. 1.2? So that's why you're seeing a dollar decline, because there's a lack of strong GDP growth and low expectations for much higher. At the same time, you're seeing more and more talk about other countries raising interest rates. We saw in Canada, for example, a few weeks ago, they raised them a bit, but not a lot. Then let's tie it back in together. Again, why don't people have money? Well, once upon a time, there used to be a thing called savings accounts. Nobody's heard of those anymore. Certificates of deposit, CDs. Now you put your money in the bank. It's been a war against savers. So now with the Fed talking about maybe they're going to raise interest rates one more time, they still really haven't raised them that much. In Canada, they only raised them after they lowered them back a few years ago when oil prices started to decline. They're still very low. So it goes back to people don't have the money to spend because the only markets that are making money are the equity markets, and therefore only the very rich. So then going back to the weak dollar, we don't see the dollar gaining strength unless there's a real reversal in the Trump policy. But then you even take it back to the global level, and look, the dollar is still the reserve currency out there that's being used the most. So it's not going away. And the yuan doesn't even win, place, or show. The euro comes in second, and after that there's not much. So even with the weaker dollar, the dollar is still at this point the prime currency on the international market scene. And the other important thing to understand of what's going on with the weaker dollar, you keep hearing over and over from these politicians, the reason them Chinese and the others, they're selling more of their products and we're selling less of ours is because our currency is too strong. Well, now that you're seeing the dollar declining, let's wait for the next import-export numbers to come out and see if there was a real boost in U.S. exports. And I'll tell you, if at best, it'll be marginal because only 12% of our GDP is export-related. And by the way, in Trump talking about how he was going to, really toughen up on NAFTA and other world trade agreements, when we look at the new NAFTA agreement that's outlined, it's really not much of anything. And again, he's blaming China, Canada, and Mexico for devaluation of their currencies as a result of the trade imbalance. And just as a fact, the peso now is up 19% this year. Because of the belief that the Trump rally in what was building it doesn't have any legs. So the dollar is not being looked upon as a strong player in the coming months.
Gerald, we'll come back to your interview in just a moment, but first, KWN received so many emails from our listeners asking which high-quality gold companies they should invest in. As a result, we are pleased to share one of the greatest gold opportunities in U.S. history. This legendary management team is about to unleash a massive drill program in the greatest, most prolific gold belt in the world. They have consolidated the second-largest contiguous land package in that prolific gold belt, and they are about to unleash a nearly 50,000-meter drill program. This company is Gold Standard Ventures. Website goldstandardv.com, symbol GSV in Canada and on the New York Stock Exchange. Phone number 604-669-5702. Ask for Mark McCartney or John Odd. A second company run by some gentlemen who are huge winners in the mining business that are quickly becoming legends for their ability to discover gold and put together incredibly successful companies. They founded Asanko Gold and Caden Resources, which was acquired by Sean Boyd's Agnico Eagle. These guys now have a company that they believe is the most exciting company ever in terms of the projects that they have put together. Everyone thinks this company is going to be acquired by a major company. Goldcorp has already made a huge investment, and I'm sure this will turn out as well, if not better, than Caden. The company I'm talking about is Orin Resources, symbol AUG in Canada and GGTCF in the U.S. If you are a serious investor who isn't shaken by the noise in the gold and silver markets and wants to be an investor in this great opportunity, call Jay Adelar at 778-729-0600 or email info@orinresources.com. That's info@AURYNresources.com. Now back to the interview with Gerald Celente. Gerald, let's relate that to gold then, because it has been supporting the gold market. We're above $1,250 as we speak here on Friday. What about the gold market? I know you were looking for eventually the move above $1,400 for it to stabilize and then shoot quickly to $2,000. But any thoughts on gold?
Yes, you're seeing, again, and our downside was if it went below, like about, 1170, we were looking for from that point, about a $80, $100 drop from there. That was the bottom. But we've been seeing gold stabilize above 1,200. And that's the key mark, the 1195 mark. And it's been holding its own because of the weaker dollar. But we have to also be concerned about, will they be raising interest rates? We kept getting mixed signals out of the ECB. Yes, they are. No, they're not. What's going to happen with the UK? Yes, they are. No, they're not going to raise them. So really all this depends upon interest rates at this point. But again, we're seeing a very stable element of gold holding above 1,200. So as we see this at this point, the increases in interest rates are really, they've been put into the price level where it's at now. And again, whether if it goes up another 0.25% in the U.S. by December, and we believe unless there's really a big downfall that we can't see coming, they will raise interest rates in December. But absent, again, something traumatic happening where they won't, they got to push these interest rates back up at some point. But again, the new norm has become very low interest rates. So we're going to keep seeing the game played the way it is, with just a little bit of fluctuation into it. And again, we're looking at gold at primarily, as we always have, as the safe haven asset. Because when you see what's going on, they just put new sanctions on Iran again. Things are heating up around with Qatar. That happened recently, where the Arab League, really their major complaint with Qatar is their relationship with Iran. You just heard out of Israel, Netanyahu saying there should be no peace talks going on in Syria as long as Iran is in there. And by the way, that's a positive that isn't making the news. Two positives that is, Derek, I don't want to talk about this anymore. I want to talk about O.J. Simpson. O.J. Simpson's back in the news. We've only been hearing this since 1994, and now that the Russians are coming is dying out of the news. Let's change the conversation to O.J. Simpson. That's how stupid the American media has become, and that's why people tune in to King World News and alternative news sources like our Trends Journal and others to get information that's going to help you rather than make you dumber. So going back to what's positive that's not making the news is what's going on in Syria. When Trump met with Putin, and it's made the news barely, they have a ceasefire going on in different zones. Number two, Trump has pulled the plug on the CIA taking our money and giving it, quote, to those moderate rebels that nobody's ever seen a face of, and that we do know at one time, a couple of years ago, they wasted $500 million of our, quote, aid because the guys retreated right away and the militants took all the armaments, and there's billions being spent on this, so Trump has cut back on that. That's a positive. But on the negatives, they're heating up the war against Iran. And with the new sanctions going on and the war drums beating louder, that to us is the hot spot to watch. And again, if the Middle East goes up in any kind of flame, that's when gold and in other places as well becomes the ultimate safe haven asset. And very important, you're seeing destabilization happening in Saudi Arabia. Doesn't make the news again. They have a very large Shia population, particularly where the oil producing is. They just announced yesterday they got one of their princes just got sanctioned by or condemned by the king in Saudi Arabia. There's destabilization going on in a number of the Middle East countries because here's the deal. What's oil selling at, crude? Under $50 a barrel. How much does Saudi Arabia need oil to sell for their budget to break even? $100 a barrel. All these countries are one-dimensionally based on oil production. Look at the problems going on in Venezuela. So as oil prices continue to maintain where they are or go lower, you're going to see more not only national instability in the Middle East, it's going to spread beyond their borders. So again, when we look at the bigger picture, that's why we maintain that we're gold positive.
And as always, Gerald, for people around the world that want to get involved in the Trends Journal, how can they do that?
Simply go to trendsresearch.com, trendsresearch.com. It's a Trends Journal. We just put out a Trends Monthly, and we do Trends in the News broadcasts each weekday night and a Trend Alert each week. It's the only place that you're going to read history before it happens.
Gerald Celente, Director of the Trends Research and author of Trend Tracking and Trends 2000 and publisher of the Trends Journal. Thank you for joining us on King World News.
Oh, and thank you for having me on, and thank you for all the King World News does to keep people apprised of what's important and how to look at the future and invest